shaking, pushing the stock exchange aside, and the NESD over-the-counter, very much smaller market, made 1% gain. You can see the numbers, and the market cap added a few icing to the 412 billion naira in terms of total market cap. And that's a very decent transaction day, about 167,000 units of shares. We're stepping. Let's move on quickly into the FMDQ, which is the Securities Exchange, where we track the four most actively traded Naira bond and Treasury papers, the Treasury bills, and of course it's a very strong comeback. And that's quite very bullish. 13.44 billion naira for FGN bonds. A very strong appetite of investors coming back after the budget release, and everyone has a bit of an idea where Buhari's administration will be spending most of the monies in 2018. Then the Treasury bills just went gaga. 285.4 billion naira transactions. Everyone is trying to get in on this game before the window begin to close. You can see the rates there at the discount high declining rapidly. The first discount high there is a bit of a typo there. It's a 15.75%, and at 115, that will be what we call, they will blow the engine, as it were. So you can see rates are trending lower. The government is still sticking with plans to restructure about 3 trillion naira of short-dated treasury bills into a brand new $3 billion refinancing package, expected to be completed before the end of the year. Let's get Victor Ofili, who is the head of research at Cowrie Asset Management, to take us through the trading and look at the midweek market for us. Victor, good morning. It's good to see you.
Good morning, Boson.
Yeah,
nice to see you too.
Yeah, the market came back 37,000 yesterday on the all-share index. So I'm sure you should be looking really happy this morning, shouldn't you?
Yes, of course. That's in line with our expectations, basically. We projected that the market will close very bullish this year. That's because we've seen an improvement in the economic indicators. GDP, as we know, increased by 0.55%. Okay. And we've also been seeing a decline in inflation, and then Treasury bills rates, interest rates also followed suit. They've been declining as well, so that will also contribute to the boost to the market. And not to forget the improvement in corporate results in the third quarter, where across the board we saw improvement from financials to consumer goods, industrials, and the rest. So that is what is informing the increase in performance in the market.
So you folks at Cowrie Assets believe that there is enough news, good news, around the broad economy and, of course, outlook of the third quarter on the fourth quarter earnings that you think will keep this market on this trajectory when we wrap up the year and we have what you call a happy new year?
Yes, of course. Yes, very much positive about the outlook for the remainder of the year. We expect that financial stocks will do very well, likes of banks, insurance stocks that used to be laggards have now been posting better results. Consumer goods, as we see spending during the December period, that should have a positive impact on sales of those companies, and also the bottom line as well.
Give me a sense of where I should be trading right now. What should I be looking to the end of the year if I have some idea of what some specific stocks or sectors I should be looking at if I have some cash somewhere here on my back pocket?
Okay, I think you should be looking at the banking stocks. For instance, I believe we have a number of them that are still undervalued. The likes of UBA, the likes of Access, Fidelity. Fidelity made a very strong comeback. Judging by their third quarter results, we saw an increase in their top line by 17.9% to 130 billion naira, and that most of that income resulted from net interest income which rose by 20% to 110 billion. Their bottom line also as a result of that increased by 65% to 14.5 billion. So I think that is what makes it. That's what warrants its inclusion into our recommended buy list. In the consumer goods sector, you can consider the likes of Nestle. You can consider the likes of NASCON. Okay, these are stocks that have really improved in terms of top line and bottom line. Basically because we've seen economic expansion, we've seen a reduction of insecurity, which has led to a recovery of the markets. Especially in the northeastern part of the country. Okay, so everything is trending well for banks, for stocks in general.
Okay, Victor Ophili, let's leave it there for today. Thank you very much, the head of research at Cowrie Asset Management. We thank you for weighing in on the market. And again, we just keep having some reactions, as it were, to the Moody's downgrade of Nigeria's sovereign issuer rating from B1 to B2, and Standard Bank, one of the biggest banks in the world, and also here in Africa, has just sent in what you call a flash note, as we're getting this from one of our sources. Says the Moody's downgrade to B2, not a cause for concern in our view. That's how that little section was, and I'm going to read that very quickly. It says, given that the rating action was mainly motivated by the fact that the country's balance sheet remains exposed to further economic shocks and that interest payments as a share of total revenue remain elevated, we argue that the Standard Bank that the action is belated. So Standard Bank says this action rating downgrade of Nigeria 24 hours ago was belated, because these are some of the concerns that they've been warned about in their previous report. Standard Bank, and while the IMF and other rating agencies have consistently flagged them for some time, saying there's nothing new in the Moody's Investor Services downgrade of Nigeria. Standard Bank is just saying something very similar to what the Nigerian government issued as a reaction to that yesterday. When we come back, we step into the world of commodities.